Right, so I'm gonna get started now. Should be alright. It's been a while since I've done some backtesting. Let me know if you can hear me alright. Should be able to. My banner's not on, unfortunately. But yeah, should be good. Anyone wants to join? I'm gonna stay on for a bit. Right, so this is the Asia range. Oh. Right. Like that. So now we're going to look at the 3 o'clock setups that tend to form. So when I'm trading London sessions, it's around 3 o'clock that I'm looking for my setup. And you can see there's one right here. Displacement to the downside, return to a fair value gap. And then we just have to figure out where we're targeting. In this case, it traded to the 25% level of the Asia range, which is not really a target in itself, but this is an original consolidation over here, so we can use that as a target, and you'll see how price treats that. You know, it returns to it multiple times throughout the day. So we are going to move that, drag that out, and I'll bring our attention to that. But also more specifically is the breaker off it. So this is the last low before this up move. See how that low failed. So this is the last low, and this is the last low before. So we're looking at the highest up close candle. So low, high, low, low, displacement. So we look at that last up close candle as an opportunity to go long, or like I said, in a shorting environment, as an opportunity, as a target for price. Seriously, why do I always have this problem? That's crazy. 1 second. Thank you for letting me know. Let me just look into why you can't see my mouse. I'll be 1 second. You should be able to see that cursor for sure now. I'm not sure why there was issues. Yeah, apologies for that. What did you learn recently? Are you talking about the post I made yesterday? Let's put breaker here. So, as I was saying, we wait for 3 o'clock, and then we wait for, what was it now? I'll have to look back at the post, what I was saying. It was that, it was that 4-hour move that we saw happening towards the end of the week as we moved into Thursday and Friday. I will get there because I do plan on backtesting that. I'm backtesting for like the next 50 minutes, so I will eventually talk on that, I guess. But it was just interesting because the guy that asked the question, it made me question it as well. So I was like, okay, how can we predict such a move? But sometimes it's not a matter of prediction. So yeah, here's our breaker. Let's say we target the breaker. Yeah, I'm gonna have a forecast out. I'll have my weekly forecast out tonight. No issues there. $4 classic. I'll go back into consolidation. Need that. Now this is quite interesting. I tend to use the range between 5 a.m. and 6 a.m. and what you'll find is that the New York session will run both sides of this range usually, depending on how bullish or bearish it is. So here you see we run out the high, so then at that point I'm expecting this low to get ran, and obviously we have these engineered lows that we dig into and we trade back down into this bullish order block. So let's get 8 o'clock marked out, because that would be my setup for New York. And remember, we've ran out the high of this range. Let's just make that. I don't want to put that like that. That's buy side taken. Excuse me. And this is sell side. And if we're taking out that buy side, I'm anticipating that sell side to be targeted. So there is a fair value gap entry here, but I wouldn't be comfortable. I wouldn't be able to anticipate such a move with this kind of expansion. That would throw me off. So I wouldn't have traded that, if that makes sense. Just because of how bullish that is in general. But on the low time frames, I'm guessing that'll be an area in which way we can home in on a certain setup for that 8 o'clock time. Nonetheless, we have a breaker, a high, low, higher high, or even this high as well can be used. High, low, higher high. Then we break through that. So I'll be watching this candle very closely. And you can see how we got an up close candle inside of the down close candle right there. So I'll treat that as so. Do I use the silver bullet? I have traded it a few times, but I don't tend to. I did go through a phase when I do use macros like that, and macros are good fun. If you look at my channel, you'll see I have some macro trades. Like, they are pretty good, but it really depends. My favorite times are definitely 3 o'clock to look for setup, and then 8 o'clock, depending on where we're at and what I'm wanting to see. Right, let's get Southside liquidity. And then that's where we'd get out of our position, ideally. And obviously you have a New York reversal, kind of. It's not even a reversal actually, so technically it's a continuation, which is what made this day quite difficult. I need to put my laptop on charge, guys. Bear with me. I'll be right back. Alright, all should be good. Alright. You can see a mean threshold gets traded to here as we come down into the fair value gap. Very nice. I can imagine on the 1 minute or lower that there must be an imbalance down there that we'd use as a buying opportunity. Yeah. Then we run out that London high. And I do remember that high impact news we had at 10 o'clock that day, and that's where we get this massive wick from. So, and price runs. So high impact news weeks like that, you just gotta be really careful in general. But I'm gonna ignore this just because I wouldn't necessarily trade that. But you can see that time dilation, high, low, high, high, displacement. So now we're looking at this low to see how price acts around it, or even these. But let's make that dot here just to make that more simple. And then you can see this was a much more classic day in terms of delivery compared to the Monday. So we'll get into that now. And what I like to do is mark the high and low of the Asia range, and I drag that out through into the London range. Sometimes even the New York range as well. Like in this example, actually, I will be dragging it through to New York, just because you can see our price uses the Asia range as a buffer to help itself navigate. So there's the high of it. You can see how price treats that. Very interesting. And then you can also look at the midpoints and such within it. So let's do that as well. A question like that is so dependent on price, on the conditions. Like, price doesn't repeat itself to that level of consistency, if that makes sense. Like, there has to be a certain time of day, and also that was off the back of news as well. So it's not just a matter of liquidity being taken. It's a matter of there being high impact news, it being a Monday, and obviously price was in a rush to get somewhere. Like, there's more important factors behind it that is likely driving price, how it did there, and we need to keep that in mind. I find backtesting very relaxing, by the way. It's quite therapeutic. I should get some I usually have like lo-fi tunes in my backtesting videos. If you've watched them, I need to get some back because it's a lot more easygoing and less boring when you got some music on. Because this is a boring task, don't get me wrong, that's why I avoid it. But it needs to be done, because this is how all the price action I understand, and to be able to get certain levels of precision is through backtesting. It's as simple as that. So we will look at the Asia range. 8 o'clock, there's usually a reversal or continuation. In this case, we can see we have a continuation to the downside from here. So we have a high, a low, a higher high. Look at the last down close candle, drag that out, and you can see our price is treating that and using that as shorting opportunities. So what I'd do if I was going to trade Asia, not that I trade it, but the point is, if I was going to trade it, I'd be waiting specifically for 8 o'clock, which is here. And then I'll say, okay, what does price want to do? Well, we are trading the breaker. I wouldn't want to take this trade. That would throw me off. But once I see this kind of displacement away from the breaker after 8 p.m., then I'll be like, okay, cool. That's a nice setup. So let's take a look at this. Displacement, fair value gap. And then obviously we have this breaker as well. And you can see our price treats the midpoint of it. So as we're trading into that, go short, and then we'd have to obviously have a target in mind as well. In this case, it'd be this low. And you can see how we consolidate at our midpoint. Again, big pullback, nothing new there. So eventually we hit that target, so I'd like to think that we could get out down there. So now let's look at the new day. So we trade on into the London. Starts at 2 a.m. You can see we dip up nicely into this fair value gap. Now again, same as what I was doing that when we looked at Monday. I'm waiting for 3 o'clock for a setup. Ideally, I'm waiting for 3 o'clock. Setups can form like around 10 to 3, quarter to 3, or quarter past 3 even. And the same applies with the 8 o'clock times. But it's around 3 o'clock that, you know, my charts are open and I'm actively looking for those setups. So we have a breakaway gap right here. Which is interesting because it lines up with the breaker, high, low, higher, high. And we don't actually trade back into that breaker. We do, however, trade back into this consolidation right here. Like so, look at that. Now, obviously, this is easier said than done, guys. But what we're doing is we're training our eyes. So that gets traded to, so 3 o'clock we trade up. Where do we trade into? A previous consolidation and a fair value gap. So, and, you know, we've had displacement here to the downside, so we want to see low prices. So ideally, I'd like to think that a short could be made down there as soon as we trade through that fair value gap. Price could reach up to here, meaning that our stop loss should be, you know, above this high, or at least here. And then obviously before we make the trade, we need to figure out where's price going. Well, can we see any kind of, you know, drawn liquidity down here? Well, we have these lows from Friday. And if you watch this week's videos, you'll know that I was calling this Friday low to get tagged. I didn't expect it to happen so quickly on the Tuesday like that, but we knew this was going to happen, so that would have helped with that trade setup, if that makes sense. Nonetheless, beautiful move lower until we run the stops, and then we close that position there. Now we can see there's a reversal that happens at around 3:30. And then so we're looking for signs of reversal. Well, we've taken out sell side liquidity. We've had a change in state of delivery right there because we ran that high. It's called a break of structure. So when price comes back down into this, we can buy that because this high is acting as a breaker. We got a low. Yeah, it's acting as a breaker. Low, high, low, low. So we look at the highest high, trade down into that. Or there's a fair value gap here that we could have keyed off, or this one, which we trade 50% off, leaving this massive gap, which is what we like to see because that shows displacement. So you see how all of these things are coming together, and also, we're looking at this on a microscopic level, as in 1 to 5 minute for trades. But what I'm saying is that the same logic applies on the higher time frames. So I'd like to think that I can go long as we trade down into that fair value gap. Stop loss below this, and then we'd be but at this point, this is where the Asian range becomes important. I'd target the Asia range highs. So I'd look at the high of the Asia range. Have we taken it yet? Nope. That's where I want to see price draw to, and you can see our price reaches up for it. So I'd probably close my position there, and then obviously you can see we do have a continuation to New York, but because I'm unsure is if we're going to get continuation in New York, I'd close my position, wait till 8 o'clock and see if a setup forms. And I think that's what I did this week. I saw if there was a continuation available, but we'll get into that. But nonetheless, I'm targeting Asia range high for liquidity if we take out the low of it. So it's not the best of getting there, quite consolidated, classic consolidation between 5 and 6, although you can see there's an expansion at 5 and 7, sorry. There's an expansion at 6. And look at how we're treating the Asia range. We trade up through the first level, find support, little fair value gap, could buy that. And then we trade to the next level, completely through the 50% level, 75% level, we consolidate at it, but we still managed to find a nice level of support. Once we're above that 50% level of the Asia range, that's enough for me to be confident that we're likely going to continue and run for the next target, which is not just the high of the Asia range, but whatever lays above it, such as these relative equal highs. This fair value gap, we can also use that to our advantage if we drag this through. Again, the fact that we're trading through... Oh, my mouse has run out of battery. Apologies. I should have another one somewhere. Yeah, I've got another mouse. 1 second. I don't know if you can hear, but I got a cold pretty much. Oh no, I'm getting a cold. Can we expect good buy when it raised below old low? I don't know what you mean, bro. Respectfully. Let's plug this in. 1 second, guys. I don't like this mouse, but it'll do, I think. Cool. So, yeah, let's see. So, yeah, fair value gap, blah, 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 consolidation. At this point, if we're buying in London, and if we've done all of this in London, and we're buying at the second half of London, which is obviously after 3:30, we need to be patient. Because all this back and forth price action is going to take a while, and also seeing the resistance it's finding at the low of the Asia range would be driving me insane. So that's another reason you gotta be careful with certain environments. Nonetheless, let's look at the New York session. So I said 8 o'clock is when I look for setups in New York, and you can see we've had obviously a clear continuation to the upside. We have left the Asia range highs. We're now above Sunday level opening, so we need to look for premium PD arrays to trade into. Well, like I said, these relative equal highs, they obviously got traded to already. And you can see we find support on that, but we need to see where we could be reaching for. So there's this high, but that would be a stretch for Asia. Sorry, that would be a stretch for New York at that point. But there is a nice fair value gap right here. I'd look at this fair value gap specifically purely because of this bearish order block that caused that move. So let's get that dragged out. Massive 5-minute one. And let's use that as a nice target for price. So 8 o'clock comes around. Ding. Do we have a setup? We wait. You can see we're trading higher. We have a fair value gap though. So I'll be looking, as we're trading into this fair value gap, I'll be looking at that midpoint. And I don't want to see price leave that midpoint, and you can see how we respect it. So this would be a perfect buy right before 8:30 as well. Assuming, I don't think, was there news on Tuesday? I don't think there was much high impact news. If you don't want to get in on this and you want to be more sure, you could wait for this expansion higher and then you buy this candle, because this is also trading down into a fair value gap. Now that's, again, easier said than done, but my point is there's more than one way to enter. And also, as this candle's trading down, it's also trading into a breaker. Why? We got a low, we got a high, we got a lower low, and then we got, you know, displacement. So we're inside a suggestive breaker. If we're looking at these two closed candles as a breaker, so long as we're inside of that range, we should be comfortable to buy, assuming we have that bullish bias. And remember, we were looking for that fair value gap to get traded into. Then we're looking for support. You can see we get that, and then we reach our fair value gap, so you get filled. So that's where I'd want to exit my position. Right, I've only got like 30 minutes left. I need to hurry up. So I don't really trade closes, as in like London close and stuff, so I'm not going to bother look at that. Let's just go straight to the next day. This was Wednesday. What we're going to do, same thing as last time. Asia high, Asia low. These days, what are you on? Sometimes you can ignore news wicks. That's interesting. And guys, make sure to drop a like on this live stream if you're enjoying the content. Drop a like just so I know, and I'll continue to do these live streams, because I usually do the live streams on Discord, and we have like around 20 plus viewers over there, and people are able to talk and such. But I thought this time, let's go over to YouTube and see how it is. So if you like it, I need to know, so we can try and make these regular. So we come down, take the low out before London, sorry. Support, fails take out this low. Then we have a nice little displacement. So what time am I waiting for? 3 o'clock again. That's where I want to see my setups from. Price comes down into a breaker. Where's the breaker? We got a low, a high, a low, and price is delivered to the upside at 3. So we're looking at that last up close candle before the down move. Drag that out, and we can buy that. Classic price action to return to the breaker, and then we leave. Very classic. This is all classic, although it looks different. It's classic as in it's just classic price behavior. I'm gonna have a nap after this. Again, not the cleanest of delivery, not until New York, but look at how we're treating the top of the Asia range. Look at this. Support. It's really important to acknowledge how price is making these steps up, because when it does it, you're trading it, you feel way more comfortable because you understand that price is probably just rebalancing. I'm from London. De Londres. So 8 o'clock. What do I want to do? What do I want to see? What do I want to see at 8 o'clock? A setup. Okay, cool. Wow. Are we bullish? Yes. Why are we bullish? Because we should have at this point we should have a higher time frame PD array to be trading up into. So let's take a look. I don't know if we're gonna have data. We probably won't have the data, but getting into moves like this, we need to have a bias. Like, we need to know on the high time frame where we want to see price go, and then based off that, we can then look at these setups to help us trade. Now we do have a breaker, low, high, lower low, and a delivery to the upside. So what we can do is we can draw out the breaker high, but we can also look at the last up close candle as well between here and here. And again, as so long as we're in here, we can be buying because we're anticipating it becoming a breaker. So as we trade back down into there, and look, 50% level of this as well. Look at that. So we can buy that. You know what? Sometimes I backtest on the 1 minute. Very rarely, only when I have lots of time. 5 minute, I've just fell in love with it. Like, I trade on the 5 minute. So, yeah, I've got a soft spot for the 5 minute. And I think it's best as well because when we're looking at time, which we pay, you can see how much I'm looking at times. You know, when I'm looking at time, it helps with that. So. Right, yeah, unfortunately we don't have the high time frame PD array, but there should be one up here in the premium. Let's go to Thursday, and then Wednesday, sorry. Was Wednesday the quiet day? No, it was, that was disgusting. It was Friday, which was weird. No, it was Thursday, which was weird. I might finish up a bit early just because I'm feeling a bit tired, but yeah, this is not a nice price action. You can see that's not nice price action. You see, times like this, I don't want to be trading. It's simple as that. But considering we had such a big move, such a large move yesterday, I'm not surprised about this consolidation on the Thursday. Sorry. Yeah. Okay. This was the quiet day, right? Yeah. This was the election day. Okay, that makes sense. Yeah. No. We're not gonna look at that. Friday. Now, obviously, this is where we're at now, pretty much. Friday was all right. You see non-farm payroll, how they took out both sides. They took out sell stops, and then they traded on higher, and they're rallying. Yeah. Can you feed into your breakers and how to see them? Yeah, let's take a look at some breakers. I'm not going to do any more back testing. So I brought a breaker. I'll show you in like a normal format. So if we have a significant price level, like here, what will happen is price will trade into it, make a high, or make a low, or make a higher high, and then price will displace to the downside. Now, as price is coming down and leaving that level, it will return to what we call the breaker, which is right here. And then price will run on and go down to its target. Oh, how do I... Lol. Is there a way for me to... Anyway, what we're looking at is here. So we're looking for price to return back into this low. So we want to look at the last down close for a bearish breaker. We want to look at the last down close candle, high, low, high, high, break lower. We look for the last down close candle before the up move, and then we want to see price return to it. That will offer us a sell. Sometimes to make it high probability, it'll be lined up with a fair value gap, maybe on the higher time frame. But we're looking to go short here, stop loss above here, and then there should be, there should be some kind of sell side target. Let me just quickly draw that out again for us. So we go high, low, higher high, break lower, wait for price to return, go short, and then we want to head into low. And then what will happen is eventually it will do it again. And then it'll go on. So this would be a premium target, and this would be a discount right here. And then we'll do the same thing. So I tend to trade breakers, but they're in line. It's not just, oh, I'm waiting on a breaker. The breaker is in line with a fair value gap. It's in line with a bias. It's in line with time. So for example, if we've seen displacement and this, let's say we have displacement and it's like 3 a.m. London and we see displacement, then I'll look for this, because that's the significant time where we expect a reversal or continuation. So I'll wait for 3 a.m. Let's say we have the displacement, I look for that, short, and then we should have some kind of high time frame sell side target to trade to. And then vice versa. It's all time and then price. So that's a breaker in a nutshell. Let's see. How do you get to know which day you should not trade? Usually it's based off how much movement there is on the previous day. Even sessions, like there's some sessions I know not to trade just because of previous sessions movements and stuff. Like, I don't know if you remember, if you've been watching my videos 2 weeks ago, we moved really quickly to a price level on Monday, and I was saying if we're moving this quick to there, they're likely going to do a midweek reversal or something. And what that did is it allowed me to frame my week in a way where I was anticipating a Thursday reversal because I saw how quickly the Monday moved. And that's another reason I don't tend to trade Mondays as well, because things like that can happen and totally change your layout or expectation for the week. Nonetheless, let's look at some examples of a breaker. I think we had one over here. Here's one anyway, and it's exactly what I was talking about in terms of time and price. Let me just quickly screenshot these just so I can put this in my Discord. Yeah, 1 second, guys. I don't know how much. 1 sec. I am still here. I'm just weary of data protection. Okay, cool. Okay, so I'm just going to take these screenshots. If you're not in the Discord, the link is in the description, so make sure to join that. And also get on the mailing list. I'll have some content and some cool stuff coming out there eventually when I have the time. I'm just getting these screenshots, then we'll look at some breakers, and then I'll probably jump off soon. Definitely want a picture of this. In fact, isn't there a way I can hide? There we go. Let's take a picture of that. Cool. And then that's all. Right. So let's clear the charts, and then we'll go to that breaker example I was talking about, which was here on Monday. If you're comfortable, and also like these breakers, so if I'm trading the 5 minute, if I'm looking for the breaker on the 5 minute, sometimes I'll even drop to the 1 minute, because it might trade to the 1 minute breaker, and then it won't do the 5 minute one, which is fine. But I'm just saying, on these low time frames, it's not like I'm just staying on the 5 minute. I'm flicking between 1 minute and 5 minute, depending on what I'm looking for, and then obviously where my target is as well. Nonetheless, remember I said 3 o'clock I was waiting for a setup. In fact, let's go to the 1 minute and take a look at this. So we're looking at this price action right here, just so I know where to study. We'll take a look into that. So let's go to the 1 minute. Right, here we are. $3. So at 3 o'clock we have displacement to the downside. So at this point I'm looking for that high low higher high pattern. We need to learn to identify it, but here's an example. We've got a high, a low, a higher high, and then we've got displacement. So this is that kind of break I'm talking about. That's the return to it. And then obviously we'll look for some kind of south side targets to trade into, such as these lows right here. Now this is a very shallow example, but nonetheless the concept is the same. So last down close candle, we can use this one. We do overshoot it, but remember I said it can be in line with a fair value gap. What do we have here? High, this high, that's a fair value gap. So with that in mind, let's say we put a limit to go short here as we trade into that. Then our stop loss would be put above this fair value gap. So let's get the fair value gap delineated as well. So now we have a breaker. What am I doing? Breaker combined with a fair value gap. And then remember we've got the time of day as well. 3 AM. Time of day. Make that a bit bigger. Let's make it like 28. Try to make this neat as possible. And then our target would be, well, we've got a swing low right here. Now, understanding where to target with price, like you probably look at this is gonna look like cherry picking, and the reason for that is because why that low, right? Like why not this low or this low? This is a significant swing low because it stands out. You need to learn to be able to identify such lows, and we can look more into this. But no, this is 3 a.m. New York time, so 3 a.m. in London is like 7 a.m. for me, so I'm awake at that time anyway. But no, I don't stay up till 3 a.m. It's 3 a.m. New York. So if you look, all the times I'm talking about is in New York time. I synchronize my charts to New York time. So yeah, that's it. So the breaker, high, low, high, high. We could look at this high as well. The reason we look at this high is because on the 5 minute, I'm going to lose this spot now, aren't I? But the reason I used that was because on the 5 minute, you can see that we have this high. That's that same high, right? So, and I'll just to show you what I mean, I'll make a line there, make it blue. But on the 5 minute, this is a significant swing high. So that's why I don't care about this high. I'm looking at this one because this is still a swing high. We've already displaced from here. So I'm looking at this swing high as the one which I'm, referring to when I'm looking at this breaker trade. So let's go back down to the 1 minute. If anyone knows a quick way of me doing this, by the way, and getting to the same spot, please let me know. And make sure to hit like if you're enjoying the content. So here on the 1 minute, you'll see that's that same high. So that's why I'm using that high. It's not a random high. On the 5 minute, it's showing me it's a swing high. It's an up close. So that's why I'm using that. Anyway, as I was saying, so yeah, you go short as we trade up into this. After 3 o'clock, we'll have our little arrow to show that we go short here. And I know a lot of you like to use this kind of stuff. I never use this, to be honest. I don't really understand. Well, I do understand it, but there's our target, and then stop loss would be at the open after displacement. So that would be that trade. Oh, but again, one more time. I'm going to go over everything that I've taken into account. I've waited for 3 a.m. We've had clear displacement to the downside, and we've had a run up back into a fair value gap, coupled with a breaker, last down close candle. So we're comfortable and happy to go short there. As we're digging into this fair value gap, obviously you can short as we're in the fair value gap. And you'll also find this down close candle as well on the 1 minute, because technically this is the breaker on the 1 minute. So although we have the breaker on the 5 minute, like this is the last this is a part of the down close candle on the 5 minute. This is the 1 minute one because it's got its own high and low in it. Now I can't go to a lower time frame because I'm not subscribed, but like, if we go down, you'll see the same thing. High, low, higher high, displacement. So that's why you can see how price just taps into it right there. Beautiful, isn't it? Again, easier said than done. But when you put context in mind and you wait for the right time of day and stuff, you can definitely do that. I'm going to take a screenshot of this as well. This will all be going in the Discord. So if you're not in there, definitely join. Get out there. Blue. Cool. Let's see if we can find another. I do have some trade executions on my channel. I have like 30 videos of just straight trade executions. We'll look into setups and stuff, but I don't like making those kind of videos. It's like, again, it's so subjective. Like although I'll make my daily reviews and stuff, it doesn't mean I go into the day 100% sure. Like, yeah, I'm going to take a trade here and then. It really depends on the conditions, and if the market's giving it me, like for example, I wouldn't want to trade in conditions that look like that, but I do want to trade in conditions that look like this. So making a trade execution video, a trading video, like how to position a trade or whatever, although it seems, sensible, it's just, I don't want people to take it the wrong way. Here's another example of a breaker. Now, time of day, I do know that 2 p.m. is a significant time. ICT spoke about it. I don't want to talk too much on 2 p.m. just because I don't trade at these times. But nonetheless, we can look at the same setup. So we've got a low, a high, a low, and then we have a break to the upside. And then we need to think about where we're targeting. Well, we've got a swing high right here, and so we can use that as a target on the buy side. Again, context. Now, I don't have much context because, again, I don't really trade these times anyway. But let's say we did and was comfortable with price having a retracement of some sort. We'd have that marked out as buy side liquidity. We wait for the significant time of day. So if that is 2 o'clock, so be it. We move lower, and then you can see price runs out. As soon as this high gets ran, I'm looking at the last up close candle because we're looking at that same kind of pattern again. That low, high, lower low, right? So now we're looking for this, aren't we? So if we do the same thing over here, we're looking for, the last up close candles. Let's get that marked out. Where's the last up close candle? This one, and then there's obviously this one as well. When it comes to marking, I like to mark out the volume in breakers because ICT states as well. Like for example, if the volume of this up close candle was higher than this candle, so not the wicks, but if the volume came up to say like here, I'd use this because it's the highest up close candle with the highest volume. Hence, I'm looking at that. But nonetheless, we're looking at the same spot. So as price returns back into it, you can see we dip into it. We spend a bit of time there. We buy that, and then we were expecting to run to that high. Again, easier said than done. But my point is, we're looking for that kind of pattern. We'll see if we can find another example. And then I've got to jump off. What time is it? 57, yeah. One more, and then I'm going to get off. But guys, if you've enjoyed this video, again, drop a like. And yeah, I'm happy to do more. Okay, here's another example. Yeah. So I'm going to do the same kind of thing. Now, again, if you've been here the whole time, you'll know that I backtested this area and we were looking for some Asia highs. But nonetheless, we've got low, high, lower low. It's just about a lower low. Very just about, but it's still a lower low. And now we're looking at the same high, aren't we? So let's do the same thing. Which sessions do you trade and how long have you been trading for? I trade London and New York usually. If London doesn't give me anything, then I'll look for New York. If I don't, if London doesn't give me anything, then I'll always look for New York. And if New York doesn't give me anything, then so be it. Like I won't trade for the day. Sometimes I'll do both London and New York, but it has to be like a really clear day. Like if it gets to like 7 o'clock New York time, if it gets to 7 o'clock New York time, and I don't know if we're going to have a continuation or a reversal, I won't trade New York. But if we get to 7 o'clock and it's clear to me that we're going to have a continuation or we're going to have a New York reversal, then I'll trade New York. So, and then with the London sessions, obviously it depends how Asia trades. And that's where my daily reviews are more useful to me because it's like, wow, this is what I want to see. Are we following that? Etc. I'll keep doing that, don't I? Yeah, low, high, low, break higher. We're looking at the high, swing high. Now, although I'm drawing boxes around this area, you can look at this as the last up close candle, but you can also just mark out the high as well. Like that's enough. For example, in this case, we don't actually trade into the volume. So that up close candle thing, which I just said, it's now disproven, isn't it? Because, well, if you were to draw out the volume after last up close candle on the 5 minute, it wouldn't reach it, and you would have essentially missed the trade. Now, this doesn't mean it's the end of the world, and this doesn't mean that it doesn't work. What it does mean is that we need to be wary of things like that, and again, look for things that can help us. So times like this, we can think about a fair value gap. And it's not that I'm completely ignoring the wicks, because the wicks are still there. It's just that I'm looking for that volume to get traded into, and this is where the lower time frame, because I'm thinking now when we drop to the 1 minute, there'll likely be volume in this wick to some extent. So let's drag this out, and we have a fair value gap lined up with a breaker high, because we're looking at the high. And let's take a look on the 1 minute and see what we can find. Was this it? No, that's the other one. Here we are. So again, time of day. What time do I like to wait for? 3 a.m. New York. We have displacement. So displacement, you might think, okay, well, we've had displacement, so doesn't that mean that we should be going on lower? No, because if you watch this backtesting video, you remember we've just traded into sell side liquidity from, we've traded into a sell side liquidity pool, as in it's grabbed stops. So we don't have that data because I'm on the 1 minute right now. But what I'm saying is that there is a level down here. In fact, let's quickly try and get it just for study's sake. Bear with me, guys. Right, so this level right here, that's what we're looking at. Drop down to the 1 minute. Nearly finished. Hopefully this is all making sense. So now there's context behind it. So we wait for 3 a.m. It runs to its sell side liquidity pool. This is a significant low. It's like a daily low. Low, high, lower low. So that's exactly what I was saying here. Low. Oh, sorry. Is that right? Low, high, lower low. Yeah, pretty much. This, oh, I done it wrong. My point anyway. Low, high, lower low into the significant swing level. This was the breaker on the 5 minute, and then this is the swing high. Price trades down into that. That was a 5 minute fair value gap as well. So you go long there. So yeah, that's pretty much it. I'll try and do a live stream next week at some point, or if not, it'll be the week after for sure. So thank you all so much for coming. Yeah, thank you all so much for watching, and join the Discord, join the mailing list, and I'll catch you in the next one. Peace.